Hello and welcome everybody. Welcome back to Sectors Made Simple, and today we have a slightly different type and style of webinar. Today we're going to be diving into the tools on the dashboard, but more specifically the beta version, or if you're watching this after the beta version has become the actual dashboard, just the dashboard. We've realized that some people don't know that the beta dashboard is available, and also some people don't think about or don't realize that a lot of these tools work really nicely together. So today what we're going to do is we're going to explore the beta version of the dashboard and use that for all of our examples. And instead of a PowerPoint presentation where I list off a bunch of bullet points, instead we're going to explore the dashboard together. We're going to take a look at trying to answer a few important questions and how we can use the different tools on the dashboard to help us answer them. It's going to be a different style of webinar, but hopefully it is a style of webinar and a topic that you all enjoy. So today we're going to take a look at how we can find the top sector and use that top sector to make informed investment decisions. So, first things first, let's do a little bit of housekeeping. Currently, the dashboard that is available is at dash.sectorsmadesimple.com. That version of the dashboard will soon be replaced by the version that you're seeing right now. This right now we call the beta dashboard. It is available at beta.sectorsmadesimple.com. All of the information is still here. Some of it, for example, you might notice, where's the momentum table? Well, momentum is actually over here on the right. These three columns that we see here, these are actually momentum. What I've done is under the settings down in the bottom left, I've chosen Show Combined Matrix. So if I don't have that, you'll see the momentum and the matrix. But because I use matrix strategies every week, I find that showing the combined matrix is a lot easier for using or when I'm using strategies. So this is typically the view that I use. Also, scrolling down, you'll notice that our sector ETF price table has a lot more information. If this is a lot more than you care about, the Show Additional Point and Figure columns, you can turn that off, which will just give you what sector it is, its current price, and its one-day price change. So that's the basics of what's changed on this part of the dashboard, but we've already gone through a couple of videos talking about these changes. What I want to do today is, instead of showing off one tool at a time, I want to look at all of the tools at the same time and use them to answer the question of how do we find the top sector, and once we found it, where do we go from there? So, when we're looking at the matrix or the dashboard, there are two different ways of answering the question, what is the strongest sector? One of the ways is to use the sector summary page, the page that we see right here. Now, there are three different columns for us to choose from. Long-term, short-term. Long-term used to be called pause trend. Now it's just long-term. Short-term used to be called X count. Now it's just short-term. And total is still total. Which of these columns should we use? I'll be honest, personally, I just use the total count. I just sort by total count and use that to figure out what the top sectors are. Why? Well, because when I'm looking at sectors like this, what I want to see is overall strength. I care mostly about its overall strength right now. So if I'm trying to find the top sectors, total count is going to give that to me. If we only sorted by long-term strength, check this out. Technology has 11 long-term, 11 short-term. Okay, it's even. Spy has 9 long-term, 10 short-term. Same thing with communications. But how about energy and utilities? Energy and utilities, if we were just looking at long-term strength, they look pretty good. But that long-term strength doesn't match up with its short-term strength. Both of these sectors have extremely low short-term strength. And if we were to compare them to, let's say, 2 weeks ago, we'd see that utilities used to have both long-term and short-term strength that it has since lost. Same thing with energy. We look 1 month ago, maybe even longer, 3 months ago, there we go. We see that it used to have a very high total count strength. It had 11 in long-term strength and 11 in short-term strength. But the important thing for us to know here, it had 5 long-term strength, 11 short-term strength. The important thing is there's a difference between its long-term and its short-term strengths. This can go the other way too. This could be that these sectors have high short-term strength but low long-term strength. Sure, that's useful information. Do I think that a sector that has high short-term but low long-term strength would be more interesting than a sector that has high long-term strength and low short-term strength? Yes, I would. Let's think about this. If you take a ball and you throw it up in the air, the ball is going to go up. That should be no surprise. But its short-term strength is how fast it's going. Its long-term strength is what direction it's going. When it first starts off, it's going to be going very, very fast. And it's going up. That short-term strength is gaining. But what will happen is eventually it will start to slow down, but that doesn't change the fact that the long-term strength is still going up. The same thing can happen with a sector. Short-term strength, if we were to think about this with a point and figure chart, short-term strength is the column. Is it in X's or O's? Is it going up or down? That can change very, very quickly. In fact, let's see how many times it's changed since the beginning of the year. 1, 2, 3 times for this relative strength chart. Let's actually go back even further to the beginning of 2022. That's going to be a lot of counting. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I'm done counting. It's switched direction. It's changed short-term strength probably 40 times. Long-term strength is harder to change. Since 2022, its long-term strength has changed once here, once here, once here, so 3 times, 4 times, 5 times, 6 times. It has changed 6 times. 40 short-term count changes, 6 long-term changes. That matters. What that's telling us is it is far easier for a sector to have its short-term strength change, harder for its long-term strength to change. So, when By the way, this is what it looks like in the background when I'm doing translations. I have to have a PowerPoint up so you get the translations down below. The magic of live television. Now, long-term strength is harder to change. So when we're looking at a sector that has low short-term strength but high long-term strength, to me, what that is telling me is that is a sector that is doing worse right now, but it used to do pretty well. It was doing really well. This is a ball that is up towards the top of how high it's going to go. It's run out of speed, but it's not falling yet. So when I look at a sector like energy or utilities, I get a little bit worried if I'm trying to pick a top sector, because that short-term strength is very low and is likely because it used to do very well, but it's changing, and long-term strength just hasn't caught up yet. Is it possible that these two short-term strengths go up? Yes. Is it likely? No. If we had a sector that has high, and we'll use, for example, staples, healthcare, and discretionary. All three of these sectors, their long-term strengths are lower than their short-term strengths. For staples, it's 4 less. For healthcare and discretionary, it's 3 less. Cool. Why does that matter? Well, what that could tell us is that these sectors are gaining short-term strength. They're starting to move. And those moves are positive. They are gaining short-term momentum. Let's look 2 weeks ago. Staples hasn't changed. Healthcare is up 3. Discretionary is up 2. These sectors are gaining short-term strength. And this is why momentum is so valuable to see, is it tells us how quickly. But that doesn't change the fact that all three of these sectors still have low long-term strength. Is it guaranteed that all three sectors will gain long-term strength? Never. Are the chances that they gain long-term strength higher? Yes. Remember, when it comes to investing, we are never certain of anything. No strategy is always perfect. The best thing we can do is use the information we have to increase the chances that whatever we're doing works out in our favor. It is possible that these short-term strengths go back down, but it is, in my opinion, more likely that we will see long-term strengths go up, and we're starting to see some signs of that. All three of these sectors have gained long-term strength in the past 2 weeks. So, if I had to put them in order, at the very bottom, I would put high long-term strength, low short-term strength. Above that, I would look at short-term strength, high short-term strength, low long-term strength a little bit nicely, in a nicer way. But total count, it gives us both. If we sorted by long-term strength, we would see energy and utilities towards the top. If we sorted by short-term strength, we would see staples, healthcare, and discretionary towards the top. Are they the leaders? No. If we sorted by total count, now all of a sudden, we are only seeing the sectors that have both good long-term strength and good short-term strength. So, That is how we would choose the top sector using the matrix. But how would you go from, cool, technology is the leader, SPY is second, communications is third, or rather is tied for second. How would you go from that to using that information? I'll be honest, it's limited. There's only so much we can do with this. And there's a reason for that. We have to remember what an ETF is. An ETF is a fund made up of a bunch of different companies that the hope, at least with these sector ETFs, is that the amount of the different companies they own is close to the value of those companies. So when you buy technology, you're not buying equal parts of all of the different companies. If we go to ETFD or ETF.com, now let's go ETFDB. It is the one I prefer. Typing is hard today. If we go here and we go to technology, we go down to holdings. When you buy XLK technology, you're buying 22% Microsoft, 22% Apple, 6% Nvidia, 5.44% Broadcom, 2.5% AMD, and so on. You are buying mostly half of your entire portfolio is Microsoft, Apple, and Nvidia. Guess what? For some people, that's really, really good. That's great information to know. But here's my thing. Let's go and look at the returns of Microsoft. And let's look at the 1 month returns. You know what? They're up 5%. That's pretty darn good, right? How about Apple? Also, just for some, so we know what we're talking about here. Technology is up 8%. So had you bought technology, XLK, you'd be up 8%. Microsoft, you'd be up 5%. Well, how about Apple? How about Nvidia? Whoops. Let's go and check Apple. Up 12%. Now we're starting to see where that 8% was coming from, right? Nvidia. I don't think I need to tell you Nvidia's insane. Up 43%. Why in the world, if Nvidia's up 43%, is XLK only up 8%? Because Nvidia is only 6% of technology. Let's keep going. Let's check out Broadcom. What's happened to Broadcom? Up 27%. Only 5% of technology. Sector ETFs are great, but they are a type of fund known as a market cap weighted fund. I'll be honest, most of the things you look at in stocks are market cap weighted. S&P 500, yup, market cap weighted. Dow Jones, market cap weighted. Almost every index is market cap weighted. Because of that, we put more value on the companies that are bigger and less value on the companies that are smaller. So, if what you wanted to do was use this is all market cap. Technology, you're actually buying half of technology is just going to be Apple and Microsoft. There 44% of it's going to be Apple and Microsoft, 6% in Nvidia. SPY. Let's go check SPY. SPY, 7% Microsoft, 7% Nvidia, 6% Apple, 4% Amazon, 2%. So 14% of SPY is Microsoft and Nvidia. 20% includes Apple. How about communications? Communications is where things get real interesting. Why? Because when you buy communications, you are buying 23% Meta, Facebook, and 26% Apple. 48% of your portfolio is 49% of your portfolio is two companies. One of them is so nice they listed it twice. Personally. But literally, you are essentially paying, if you're buying XLC, half of what you are buying is Meta and Google. Okay. If what you want is the performance of the sector, these are the big dogs in the sector. There's no denying that. There's a reason that we love sector ETFs. But it limits how we can use this information. Because we can only use this information when we are comparing it to other market cap things. That's how the matrix works. We are comparing one market cap weighted ETF to another market cap weighted ETF. So, what can you do with market cap weighted leadership? You can buy that sector. Sure. Matrix strategies are really cool. They offer a lot of different ways to use our data, but you're not required to use them. There's nothing that is stopping you from going, right now, technology is the strongest sector. I'm going to go and buy technology. Honestly, that would be something really fun to do. Go back through the history of 4 years of the Matrix and just make a portfolio that holds the strongest sector for every single day of the year. I'm actually writing that down. That would be hilarious and very interesting. New projects. Track each sector leader per day and hold that sector. Cool. You could do that. Do I have numbers for how it would go? No. Am I going to find the numbers? Probably. Nate's watching this right now. He's like, darn it, more work for me. But that's the fun of having this data, is figuring out creative ways to use it. So, can you use the matrix to trade strategies? 100%. There's a reason all of these strategies exist. They all use this one table, nothing more. Can you create your own strategies? Yes. You can go and you could only buy the top sector. But you're limited to that. Personally, if I'm using any information from this combined matrix or just the matrix summary page, I'm leaving it at the matrix summary page. So, at the beginning of this webinar, I talked about how all of our different tools work really nicely together. We've spent 20 minutes talking about why the matrix is really cool, and you shouldn't really use the matrix leaders for anything else. Yeah. So let me show you the other way of finding a sector leader that we can use for everything else. But before I do, Romulo has a question. So using this method, we can also track sector rotation. Yes, 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 yes. This is the picture of sector rotation. Sector rotation is not always, is almost always market cap weighted. Because if the big companies are doing well, typically that sector will follow that momentum. So, can we use the matrix to track sector rotation? 100%, that is how I use it. When we go through our monthly sector recaps, and I make the graphic of here's the sectors that are leaders, here's the sectors that have gained the most momentum, I literally do this. What sectors are the strongest right now? Sensitive sectors. What are the weakest sectors right now? sectors that are highly price reliant, and sectors that are tied in with interest rates. Defensive sectors are doing okay. If I wanted to find what sectors have gained the most strength, I'm just going to do 1 month momentum, sort the change in total count. All right, look at that. There's not a single picture that is clearer of sensitive sectors are doing really darn well. Utilities, a defensive sector, is falling behind. So, yes, I would 100% use the matrix for sector rotation. That is why we built it. This was the first tool we made because we wanted to find a better way of tracking sector rotation. This is what we created. It has never lost any value. It is as valuable, if not more valuable today than it was when we first made it. The reason that I am saying that we should only use it for sector rotation or for ETFs is because we have a better way. Originally, this was the best way and it's better than nothing. But now we have a better way. So, let me show you that better way. Because there is a second way of finding who the sector leader is. And it exists within the S&P 500 screener. Really quickly, audience participation time. How many of you have used the S&P 500 screener? Don't need to lie. I want real responses. How many of you have actually opened up this page on the beta dashboard or the real dashboard and used it? Because today I'm going to show you why the answer should be every one of you. Should you worry about the sector strength matrix? Maybe. But that's not the real reason that we're here. Should we worry about momentum always? No. The real value here, the thing that I want you all to try out using, is the sector strength averages. What this table tells us is what sectors are the leaders at any given moment. But the difference, these are all market cap weighted. So technology, half of technology is going to be NVIDIA, Microsoft, and Apple. Communication services, half of it is going to be Meta and Google. The sector averages are equal weighted, meaning that if we look here, Meta, all the way down to Live Nation Entertainment, they both count the exact same amount. They both are graded on a scale of 0 to 500. We do that for every company in every sector. So the biggest company in the sector and the smallest company in the sector matter the same amount. It is very similar to BPI in that they are both equal weighted. Every company matters the same amount. Why does that matter? Why is that useful? Well, what is worth more? 5% gain in the smallest company in the S&P 500, or 5% gain in the largest company in the S&P 500. What weighs more? A pound of water or a pound of flour? 5% gain is 5% gain. 1 pound of something is the same as 1 pound of something else. They're all equal. We're grading them the same way. This does that for sectors. So, now what we can see, check this out. What is the strongest sector right now? Well, let's quickly go back to the sector summary. What was the weakest sector? Real estate. But what is actually the strongest sector when we look at it equal weighted? Wouldn't you believe it? I promise you, this isn't me pretending to create some story here. This is just fairy tales in real life. Real estate. Real estate is the weakest sector by market cap, the strongest sector by average relative strength. So, if what you wanted to do was find one company to invest in, this is where you should be looking. You shouldn't be worried about only checking the matrix, because the matrix is going to give you the value of those big companies. Here, everyone's playing with the same deck of cards. They all have the same chances. So all of a sudden, real estate becomes the strongest sector overall. How cool is that? So, now we have another way of looking at relative strength. And where would I use this? I would use this for everything. This is the sector that I would, if I want a sector to say this is the top sector, to do anything beyond buying that sector ETF, these are the numbers that I'm using. So, now that we know that real estate is actually the top sector, for the rest of our examples, we're going to use real estate. If we run out of companies to check because real estate is a smaller sector, we will use technology as our second choice. So, really quick, Erica, yes, real estate would be XLRE, but remember, XLRE is the market cap weighted real estate. So when you're buying XLRE, what are you actually buying? Let's find out. When you buy XLRE, you are buying Prologis, that actually took me a minute, American Tower, Equinix, Welltower, Digital Realty Trust. You're buying these really big companies. But there's a lot of companies within real estate. There's 33 of them in total. So, is it as gnarly? Is it as bad as like communications in terms of you're buying only 2 companies? No. But the fact that real estate is this strong, but is as a sector, as a market cap weighted sector this week, it tells us that there are some very small or smaller, we're again talking about the S&P 500 here, there are smaller companies that aren't getting a chance to shine because of all the really big ones. So, let's give them their chance to shine right now. How would we use this knowledge of what the leading sector is? Let me show you a few different ways. The first one is on the same page for the S&P 500 matrix. We're going to go to sector. All of these options up here let you filter to show only results for those different things. So we're going to go to sector, and we're going to choose real estate. So now we are only looking at real estate companies. From here, there are a few different ways that we can do things. The first example is me saying, I have money in my pocket right now. What do I want to buy? Well, there's 2 different ways to answer that. And at a certain point here, by the way, we have to remember investing is part science and part art. I can show you the science, but from there, the art side, I have to leave up to you. Let me show you the science though. Real estate. If I want to buy the strongest company in real estate, I'm just going to sort by total count. I want to make sure it's on a buy signal, and I want to make sure it's going up. Well, darn. Because the first 12 companies on this list, they have that. They're all on buy signals. and they're all in columns of X's. What do we do now? Well, how else can we break a tie of a bunch of different companies? Well, we have a tool for that. So what I'm going to do is I'm going to make a custom matrix. Remember that one of the limits of custom matrices is that we can't put 500 companies into it. So what I'm going to do is I'm going to take a list of the top 8 companies from here. So that is going to be all the way down to PSA. And we're going to go and create a custom matrix together. So today is the 18th of June. Sorry, 7 tickers maximum. My apologies. So we're going to go through and we're going to add ESS, IRM, EXR, well, DLR, AVB, and MAA. And we're going to set that custom matrix to run, and we'll come back and revisit it in a few minutes. Because the other way that we can use this is right now we are getting an idea of all of the companies that are currently on buy signals. This is me saying, I have $100 in my pocket and I don't want to have $100 anymore. I want to own some companies. So you want to buy a company right now. But what if you want to make a watch list? Ready to take a photo? Don't take a photo. Do it. Join me. Open up the matrix. Do this too. You have all the tools. That's the fun of this. It's show, tell, and try. These are fun things that I want you to experience. I want you all, the next time I ask, have you ever used this S&P 500 screener page, to say, yes, I have. Try this stuff out. It's a lot of fun. You find so many cool different ways of discovering investments. So, let me show you another way. Because we just talked about one way where you make a decision and you buy something right now. How about if you want to make a watch list of companies that aren't on buy signals yet? So when they go on buy signals, you're ready. Well, for that, let's think about what that would be. We want companies who their price is going up. The price has to go up to go on a buy signal, right? But we don't want them to be on a buy signal yet. We want them to go on a new buy signal so we can hop in. So what that means is that our signal, we want it to be a sell signal or a breakdown. Our column, we want the price to be going up, so we want it to be a column of X's. 2 companies. We went from 500 companies in the S&P 500 to 2. So what you could do now is add both of these companies to a watch list. You would go in, and pretty soon you'll be able to actually open up the chart in Sectors Made Simple. Right now, we can't. Oh, by the way, check this out. Remember that company we just talked about that's not yet on a breakdown? Guess who went on a breakout today? This company literally went on a breakout today, but check this out. If this isn't a perfect example of a resistance barrier, I don't know what is. This $292 mark, we have 1, 2, 3, 4 different times that it reached that price but didn't go past it. It has 1 box short of it in May, and now is hitting that resistance barrier again. This is where the art comes in. The science is finding the companies that aren't yet on buy signals. The art is going in and looking at the chart saying, you know what? I don't believe you. I don't trust you yet. Why? Because how many times have you done this to me? How many times have you gotten right below a breakout and given up? So I wouldn't have set my price alert at 280 or 290. I would set it at 292. No, 293. I want proof that you're going up. Then I'll join you. So there's more work to be done here. This wouldn't be, for me, a company I immediately go and pick up. I want to see that price go up above that spread quintuple top breakout is what the name of this would be. Spread because there's one box that didn't reach that resistance barrier, but we still have one, so single, double, triple, quadruple, quintuple top. This would be a good watch list one. How about O? By the way, O, really interesting company. If I recall correctly, they offer monthly dividends. So they offer monthly dividend payments to shareholders. Kind of cool. What we're seeing here is a bit of a different story. We have two continuous negative trends, these red lines, and we're getting close to a breakout, but let's look at this. That 4 is from April. 5 is from May, 6 is from June. That's not a lot of movement. That is a very, very slow moving company. Let's compare that, by the way, to something reasonable like Microsoft. Microsoft's entire chart goes back to July of 2022. This entire chart, we can almost see the beginning of COVID on this chart because of how infrequently or how not often it's moving in price. 2023 is a whole 1, 2, 3, 4, 5, 6 columns. 7 columns. That's not enough action for me. If I'm buying something, not because I love the stock, but because I want it to, because it goes on a buy signal and I want to ride that buy signal and then get off, that's not a company that's going to move very quickly. Uh-oh. We've already exhausted both of our companies. Is that the end of it? No. How about technology? Let's go add technology here. Okay, we just went from 2 companies to 13. Could you go through and add every one of these to your watch list? Yes. Am I personally going to do that right now? No, we'd probably spend the rest of the webinar doing that. But this should give you an example. It should show you that we can make these decisions, or we can find our choices very easily with not a lot of work. What did I do to get here? Let me show you again. Sector strength averages, sorted by total count. I picked the top sector. I filtered the screener matrix by the top sector. When I felt like what I wanted to do was find companies that are about to go on buy signals, I found things that aren't on buy signals, sell signals, and things in columns of X's. 2 companies isn't enough for me, so I checked what the next highest total count strength was, which was technology, and now all of a sudden we have some fun on our hands. But there's one more way that we can use this. Remember how I said before that if we look at this list and now we have a bunch of companies that are all on buy signals, how do we pick the right one? Well, yes, we can make a custom matrix, and we'll go check that in a second. But there's one column that is playing a little bit of hide and seek because I make these pages a bit bigger for the webinars. But on your page, you'll see it like this. Signal date. We tell you when the company goes on a buy signal. Why does your page and sectors made simple look different than mine? I am using the beta version of the dashboard. This is going to be what the dashboard is in a few weeks. So pretty soon, this will be the version of the dashboard that everyone has. My goal through this webinar is to give you cool information and useful information, but also to show more of how the new dashboard will be used. But everything I'm doing right now, you can do on the actual matrix as well. But back to signal date. If I want to know and I want to find companies that are strong companies that have recently gone on buy signals, I can sort by signal date. I only want companies that are on buy signals, and I only want companies that are going up. What that's going to do now, sorting doesn't seem to be working here. I think I know why, and we will get that fixed. But we're going to pretend that the sorting is actually working. Oh, I think I have to go away. Bye. Eventually, what this should do for us is it should show us the companies that are going on buy signals right now. So, for example, it would show that EXR went on a buy signal last week on Wednesday. ESS went on a buy signal last Monday. EQIX went on a buy signal last Wednesday. So you can find companies that are going on buy signals a week ago, or sometimes even days ago. So now let's go check EXR. That's a pretty cool looking chart. There is price movement. There is a clear positive trend going on. That's an interesting stock. I'm not going to say good, bad. The goal here is not to tell you go buy this. The goal is to show you that this information is things and stuff that you have access to. You can do this in minutes. Let's go check another one. Let's go check MAA. How about that? Last sell signal it went on was in January. Since then, buy signal, buy signal, buy signal. Another very interesting stock. I'm back. Did you miss me? So now, let's go back to our custom matrix, because that custom matrix that we made before is done. And let's take a look. As a reminder of what this custom matrix is, all it is the strongest 7 companies that are on buy signals and in columns of X's. So that matrix, if we were to look at it, as a reminder, the beta dashboard is actually a beta. It's not the full version. There are some glitches that we're still working out. So we're going to have to go back to the actual dashboard for this. So we're going to go to custom matrices, and we're going to take a look at the custom matrix that we made. And all of a sudden, we took 7 companies that otherwise looked very similar. Right? We took 7 companies that all have the strongest counts. But all of a sudden, ESS, that strongest sector, or the strongest company, it's third. EXR, the third strongest company, is number 1. IRM, the number 2, is tied for number 1. Now we have 2 different companies to choose from. How do we make a decision? Well, now we would actually want to go and look at their charts. This is where we would go in and we would look at EXR. That's a pretty interesting looking chart. And we would look at IRM. So a pretty interesting looking chart. And now we're going to talk about artificial intelligence. Okay. Now is where the art part comes in. I can't tell you how to choose between those 2 companies, because really that is going to become a personal kind of thing. Figure out what matters to you, which of these companies you think will do better. Or you think both will do well, there's no reason you can't split your investment between the two. But what we've done is doing very little work. All of this, by the way, if I'm not talking through explanations and making jokes, you can do in about 5 minutes. 5 minutes and some coffee. You are now so much further along than if you had no tools. Now, someone was asking, who was it you're gonna get called out? Who were you? Saw someone say it earlier. Someone was talking about fundamentals. I'm not finding it. But someone was asking, what about fundamentals? I like using fundamentals. Well, my favorite website for fundamental screening, Romulo, was the one talking about it. My favorite website for doing fundamental screening is Finviz. We're going to go to Screener. We are going to go over here to our index and S&P 500. Why? Because this data is for the S&P 500. We should use it for the S&P 500. Sector, we're going to set to real estate. And from here, the fundamental analysis thing I love using, if it ain't broke, don't fix it, is my mom's Be a Profit. I'm going to go through this very quickly because I have one or two other things I want to talk about. EPS growth quarter over quarter, 15%. Institutional ownership above 50%. We have lots of webinars on this if you want to learn more about what I'm doing. We're also going to have return on equity above 15%. For technicals, we want a beta of less than 2. We want our 52-week high-low to be 0 or 10% below its high. We have one company, SPG. So if we want to go with technicals, we have one company to choose from. Let's go check out that chart. Okay. What do we have here? We have a triple top breakout that then formed a triangle. So a triangle usually forms when the stock's price changed very quickly, and it's trying to figure out where does it belong. It will usually start big and work its way smaller until it finally breaks out one way or another. It tested that previous resistance barrier at 156. It saw its shadow, and we got 3 more boxes of winter, aka O's, and that's where it sits today. Cool stock. Glad we got to check it out. Would I be rushing to go buy this right now? That's your decision to make. Personally, I would. But we've already done all the work. Why not just turn this to technology? Everything else is there. The only thing we have to do is change real estate to technology. Where do we get technology? S&P 500 sector averages. Now we have 4 more companies. Artista, Garmin, Microsoft, and TE. I need to pick between these 3? Okay. What do we have? ANET, Garmin, Microsoft, TE. Too many tabs. Microsoft, Garmin, ANET, and TEL. By the way, the reason that we got rid of the company names is so that you don't have to play Where's Waldo with the one ticker symbol that you want. There we go. What's the name of this? This is going to be called Tech Companies because I wanted to. that will be processing, and we will go and check that out in a little bit. The final thing that I want to show you all is that all of this is just one page. There's one more place that we can use this information. Point and figure setups. In point and figure setups, this is a whole different conversation. I have an entire webinar or 5 on point and figure setups. What I want to show you is now you understand the context. Use these sector averages. Use the top sector as your filter for this. So you can look for companies. By the way, if you don't really want to think too much, just use potential breakouts. This will be very similar to what we were doing before with looking at companies that are currently on breakdowns but columns of X's. This is just another more advanced way of doing it. We have 27 potential breakouts in real estate because this is not just the S&P 500. This is the entire, right now, NASDAQ. Pretty soon, this is the entire New York Stock Exchange. Pretty soon, it will be the entire U.S. securities market. But plug in real estate. Use that as your sector filter, and then do the rest of your analysis from there. Most decisions I make, most research that I do, starts with checking this table. I think equal weighted information is so valuable because it lets you find sectors like real estate that just because the big guys and girls aren't doing well makes you think that it's a weak sector. It's not a weak sector, the big companies are just weak. Or aren't as strong as the other big companies. But that doesn't mean it's a bad sector. It doesn't mean that the little companies in that sector can't provide some good returns. So we're going to wrap things up by showing off that tech sector relative strength matrix, because I'm going to assume it's done. How do we find these companies? Be a profit with technology as the sector. Well, if you needed to find one that's a leader, you got one that's a leader. This webinar was just under 1 hour. But you now know the difference between choosing a top sector because you want to invest in the ETF and choosing the top sector because you want to use it to start your research. The sector summary is likely the end of your research. You are going here because you want to follow sector rotation, and sector rotation is usually market cap weighted. But when you're ready to take your next step, go beyond the matrix. Use the sector strength averages. The equal weighted information here is incredible at helping us to find opportunities in the market. We're not focused only on the big companies, we're giving every company a fair chance at success. That is the point of relative strength, isn't it? The point of relative strength is to compare all of these different companies and sectors, find which ones are the leaders. Not to let one or two, or just let the companies that have a bigger price tag dominate the market. Share price, sure, as long as it's not a penny stock, is pretty irrelevant. Yes, it does change buying power and volume. The important part is that it's an even playing field. It lets companies shine that are smaller companies within the S&P 500, and it's not crazy difficult to use. You sort, most of the time I'm doing this, I sort by total count, and that's usually the end of it. So that's the science. Now that you know the science, I leave the art and the exploration to you. Thank you all so much for joining us today. It was very fun to get to show off a bit more about the beta dashboard, to show you what these tools look like, and more importantly, how many of these different tools can be used together to give us a more complete picture of relative strength at a sector rotation level and the company level as well. If you have any questions, please, you can always email us at support@sectorsmadesimple.com. Thank you all so much. See you back next Tuesday for the next Sectors Made Simple members webinar and our SM Espanol this Thursday.